Hello and welcome to AE Accounting Tutorials. We are continuing our series on the double entry principles. But in this particular video, I want us to take a full practice question on the double entry principles to help us learn how to record double entry transactions in the various T accounts. Afterwards, the rebalance of those accounts, then we use the closing balance on the account to prepare what we call a trial balance. But remember that in the parts 1 and 2 of this video, we've already learned about the basic concept with regards to the double entry principles. That is, we learned about the rule guiding the various class of accounts. That is the double entry rule for personal, real, and nominal accounts. We proceed to also learn the double entry rule guiding assets, liability, and capital, and revenue and expenses as well. So we are going to apply all those knowledge from the part 1 and 2 of this video to help us record the double entry transactions in the various T accounts. So if you haven't subscribed to this channel, I will encourage you to subscribe to this channel, turn on your notification bell so that any moment I upload any new video, you get notified on your devices. So without wasting much of our time, let's quickly go through the transactions or the question so that we see how best we could record this double entry transactions in the various T accounts and probably preparing the trial balance. I've already explained the concept of trial balance in the part 2 of this video, but for the sake of those of you who haven't watched that video yet, the trial balance is a statement prepared to show all debits and credit balances on the various T accounts in order to check the arithmetic accuracy of the entries we've made. So the trial balance helps to check the entries we've made in the various T accounts if they are actually right. Okay, but there is a limitation to trial balance. But let's quickly go through the question and see how we could pass the double entry transaction. Jena Limited started business on 1st January 2020 with a capital of 160,000 Ghana cedis. The following transactions took place during the month of January. So January 1st, purchase of furniture by cash, 24,000 Ghana cedis. 2nd January, purchase of stationery by cash, 2,000 Ghana cedis. 3rd January, bought goods on credit from J. Thomas, 50,000 Ghana cedis. 5th January, bought goods for cash, 35,000 Ghana cedis. On the 15th January, sold goods for cash, 60,000 Ghana cedis. On the 18th January, sold goods to Brenda and Co. on credit, 2,000 Ghana cedis. On the 20th of January, paid advertising expenses by cash, 2,000 Ghana cedis. On the 21st, returned goods of 1,000 Ghana cedis to J. Thomas. On the 22nd, cash banked 3,000 Ghana cedis. On the 24th, Brenda and Co. returned goods of 200 Ghana cedis. On the 25th, paid J. Thomas cash, 35,000 Ghana cedis. On the 27th, withdraw check of 1,000 Ghana cedis for business use. On the 28th, paid rent by cash, 3,000 Ghana cedis. On 30th, took cash of 2,000 Ghana cedis for personal use. And finally, on the 31st of January, paid salaries by cash, 6,000 Ghana cedis. You are required to A. Open ledger accounts to record the transactions, and B. Extract a trial balance as at 31st January 2020. Good. So this is a comprehensive double entry transaction questions, and we are required to open the various ledger accounts. Is that okay? So in solving a double entry transactions question, after reading through each transaction, the first question you need to ask yourself is that which accounts are involved? How many accounts are involved? So you should be able to identify the accounts involved in each transaction. After you are able to identify the account involved, the next question you need to ask yourself is that which account will be debited and which account will be credited. So after you are able to identify these two, then you are good to go to record your transactions. Is that okay? So because of time, I would like to open the various accounts on the board, then we make the entries as much as possible. So after the various ledger accounts have been opened on the board, the next thing to do is to record the transactions in the account. Is that okay? I told you that in solving a double entry transaction question, after reading through each transaction, you ask yourself how many accounts are involved. After identifying the various accounts, the next thing to ask yourself is that which account will be debited and which account will be credited. Is that okay? And this will make your work very, very simple and neat. Good. So the question states that Gina Limited or Gina started business on 1st January 2020 with a capital of 160,000. It means that he introduced a capital of 160,000 into the business in the form of cash. So a business can decide to introduce capital into a business in different forms. The business can do that through assets. The asset could be a non-current asset or current asset. So a business can decide to introduce capital in the form of cash or bank, that is check, that is a current asset. Another business can decide to introduce capital in the form of a non-current asset. This could be a motor vehicle, this could be machinery, and they are all valued. They have monetary terms. Is that okay? But if the question is silence on the type of capital being introduced, we consider that to be a cash. So in this particular video, Gina started business with capital of an amount of 160,000. We are to use what we call the real account over here. We debit what comes in. When the business introduces capital, cash is coming into the business. So we are to debit cash account because cash is coming in. That is the rule for real account. So we come to our cash account. So we debit cash account. That was on the 1st of January. It was capital being introduced. And the amount was 160,000. Is this clear? Every debit entry must have a corresponding credit entry in the corresponding account. So the corresponding account here is capital. So we move to capital account, then we credit capital account. The same 1st January from cash. The corresponding entry was in the cash account, so 160,000. Is this clear? So in this very first part, we need to ask which are the accounts involved. So we are able to identify that we have cash account and then capital account. The next thing, which account to be debited and which account to be credited. To answer this question, the double entry rule for the various class of accounts helps us do this. In this particular transaction, we are using real accounts. Is that okay? We debit what comes in. So cash is coming into the business. So we are debiting cash in the name of capital. We record at the credit side of capital account as a corresponding entry. We move to the next transaction. That was on the same 1st January, purchase of furniture by cash. The business purchased furniture by cash. So what are the accounts involved? We have cash account and furniture account. Is that okay? So after identifying these two accounts, which account to be debited? Furniture is an example of real accounts. So let's still use the real accounts rule. We debit what comes in, credit what goes out. So we bought furniture. We acquired the furniture. Furniture is coming into the business. So we debit furniture. And our cash is going out. So we credit cash account because cash is moving out of the business. There is an outflow of cash. So we look for furniture account and debit it in the name of cash. That was on 1st January. Cash. And the amount was 24,000. Good. So the corresponding entry will be in a cash account, the same 1st January. This time furniture. And that was 24,000. Are we clear on this? Good. So we move to the very next transaction. So on 2nd January, purchase of stationery by cash. of an amount of 2,000. We purchase stationery. So we have stationery account and we have cash account. The question is, which account should be debited and which account should be credited? If you're able to identify one of the account entry, the corresponding is simple. So we purchase stationery by cash. It means that our cash is moving out. There is an outflow of cash. So the same real account principle, we credit what goes out and debit what comes in. Is this clear? Good. So cash is moving out. That was on the 2nd of January, and we bought stationery. The amount was 2,000. So we look for stationery account and then do what? Debit it in the name of cash. So we have stationery on 2nd of January by cash. The amount was 2,000. I was using the rule of the various class of account to make this entry. Someone may still ask of the class of account. Let me still talk about it in a minute before we proceed to make the entries. I said that account has 3 broad classifications. We first of all learned that an account, it is just a page of a ledger. And these accounts are classified into 3 broad headings. We have the personal account, the real account, and the nominal account. Personal account records transactions relating to persons, example, debtors and creditors. So we are saying that this rule says that we debit the receiver and credit the giver. Is this clear? Good. We move to real account. Real account records transactions relating to tangible items. These tangible items examples are assets. We could have motor vehicle, furniture, stationery, so on and so forth. This account, its rule is that we debit what comes into the business, credit what goes out. There is another class called a nominal account. So a nominal account says that we debit all expenses and losses and credit all gains and revenue. So if an account is an expense account, for instance rent, it means we will be debiting rent because it is an expense. So these are the rules we are using to make the entries. So let's proceed. Good. On the 3rd January, bought goods on credit from J. Thomas. We bought goods on credit from J. Thomas. Take note of this. When we acquired goods for resale, the account of that particular goods will be considered as purchased. But when we bought an item or we bought any item to be in the business to assist the business to generate revenue, or to be in a business for more than one accounting period and to help the business to generate revenue, we open an account of that particular item we bought. But if we bought goods or an item that are purposely for resale, we consider that account as purchases. So take note. So the 3rd January bought goods on credit from J. Thomas is 50,000. So because the goods are for resale, we consider that as purchases. So purchases. So we purchased the goods from what? J. Thomas. So J. Thomas, as an example of personal account, is giving out the goods to us or to the business. So we credit J. Thomas account. So we look for J. Thomas as a creditor. That was on the 3rd of January. So it was purchases that we made. I've shortened it. The amount was 50,000. Good. So we debit the purchases account as well on the same that was 3rd January, and it was from J. Thomas, and it was 50,000. Simple as ABC. Good. The next transaction was on the 5th. Bought goods for cash, 35,000. We bought goods for cash. So anytime we bought goods, what happens to our cash? Our cash is moving out of the business. There is an outflow of cash. So with the rule of real account, we credit what goes out. So our cash is going out as a result of what? Purchases. So we come to the cash account. That was on the 5th of January. We made purchases And we are crediting because cash is going out. The amount was 35,000. So we come to the debit side of the purchases account in the name of cash. That was 5th of January. Cash 35,000. Very good. The next transaction was on the 15th. Sold goods for cash. We sold goods for cash. So anytime we make sales, the item we sold is going out, then we receive cash. So we sold goods for cash, and the amount was 60,000. That was on the 15th. 60,000. We sold goods for cash. It means cash is coming in. The same real account debit what comes in. So we move to cash account. That was on the 15th of January. We make sales, and the amount was 60,000. It means we go to the credit side of sales account and credit it. So we look through where is sales account. Sales, we have sales account over here. Good. This time we are crediting because we debited cash account. That was on the 15th of January, and by cash it was 60,000. Good. The next transaction was on the 18th. Sold goods to Brenda and Co. on credit, an amount of 2,000. So we sold on credit. So Brenda here is a debtor to us because we sold to him on credit. And debtor is an example of what? Personal account. So we debit the receiver. We sold goods to Brenda. Brenda is receiving the goods. We debit Brenda of an amount of what? 2,000. So that was on the 18th. On the 18th of January, we sold goods to this person on credit, and the amount was 2,000. It means we moved to sales account and then made the corresponding entry at the credit side. That was 18th. We sold goods to Brenda, and it was 2,000. As I take note that Brenda is a debtor because we sold goods to him on credit. He hasn't paid yet. Thomas too, we bought goods from him. So Thomas is our creditor because we have not made payment yet. Is this clear? Good. So the next transaction is on the 20th. Paid advertising expenses by cash. We paid for an expenses by cash. Anytime we paid for an expenses, the first question is what are the accounts involved? We have the name of the expenses account, that is advertising, then the source of income we used to pay, that is cash. So we paid advertising by cash, and the amount was 2,000. So we have advertising account and cash account. We paid by cash, so our cash is going out. So with real account, we credit what goes out. That was on the 20th. Advertising, it was 2,000. Then the corresponding entry will be at the debit side of advertising. And advertising is an expense. The rule of nominal account says that debit all expenses. So on the 20th of January, cash, we paid through cash. The amount was 2,000. Good. The next transaction was on the 21st. 21st January, return goods of 1,000 to J. Thomas. Gina as a business returned goods of 1,000 to J. Thomas. J. Thomas is a creditor to Gina as a business. So it may be due to certain reasons the product or the goods haven't met the standard of Gina as a business, so they decide to return 1,000. So anytime they returned, the business is returning out to what? The creditor or Thomas. So we call that a return outwards. The business is returning the product out of its business or premises. So we call that a return outwards. So we are returning the product to who? J. Thomas. So J. Thomas will be receiving the product when we returned. So we debit the receiver from the personal account to who perspective. So that was on the 21st. 21st of January, return R/O means return outwards, and the amount was 1,000. Very good. So we go to the credit side of return outwards account and credit. This is return outwards account. That was on the 21st of January. That was from J. Thomas. We return to J. Thomas an amount of 1,000. So this is a returned outwards. Good. On the 22nd of January, cash banked 3,000 Ghana cedis. Cash banked 3,000 Ghana cedis. This simply means that an amount of 3,000 in the cash account has been sent to bank, or an amount of 3,000 as cash in hand has been transferred to bank. So the cash is moving. We are taking cash to bank. Because cash is going out, we credit cash. Then we debit bank because bank is receiving. So the date was 22nd of January. It was bank, right? So it was bank and the amount was 3,000. 3,000. So we move to bank account and say that on the 22nd of January, we have cash of 3,000. Very good. Listen and listen good. Anytime there is a transaction between bank and cash, or bank account and cash account, we call that transaction a contra entry. We call it contra entry. A contra entry. A contra entry means there is a transaction between cash and bank. So we represent that by C, small c, meaning that there is a transaction between cash and bank. So this place too, I have to represent small c. Because of space, I've put in it at the top of cash. Is that clear? We move to the next transaction. That was on the 24th. Brenda and Co. returned goods of 200 Ghana cedis. Brenda has returned goods of 200 Ghana cedis. Remember that Brenda is a debtor to Gina as a business. So Brenda is returning goods to the business. So the goods is coming into the business. So we call that a return inwards. Is this clear? A return inwards. So Brenda is sending part of the goods. So in this particular scenario, Brenda is giving out the product to the business. So we credit Brenda's account because Brenda is an example of personal account, and we credit the giver. Is that okay? And the date was on the 24th January. This is a return inwards, R/I, and the amount was 200. Very good. So we move to return inwards account and debit it in the name of, that was on the 24th, right? In the name of Brenda and Co. The amount was 200. Is this clear? Good. From 24th, we move to 25th. Paid J. Thomas cash 35,000. We've paid J. Thomas cash of 35,000. So the business is paying out an amount. So with the rule of real account, we credit what goes out. So we come to cash account. That was on the 25th of January. We paid J. Thomas. So we come to J. Thomas account and debit it because J. Thomas is receiving the money. That was on the 25th of January. That was cash received of 35,000. Very good. The next transaction after 25th was 27th. Withdraw check of 1,000 cedis for business use. Gina, as the owner of the business, withdraw an amount of 1,000 cedis for business use. Anytime the owner of the business withdraw part of the money for business use, it means the money is still in the business. It is not out of the business. So that is not a drawings. Is that okay? So it means that the owner of the business withdraw 1,000 from the bank for business use. So when the money is being withdrawn from bank, it will be added to cash in hand before the money will be used to pay for any other expenses. So that will be a transaction between bank and cash again. That was on the 27th. On the 27th January, we have cash, and the amount was 1,000, right? Amount of 1,000. Then we come to cash. So I would say that this is what we call a contra entry. So a small c. The amount is 1,000. We come and debit here on the 27th. Cash account from bank. Another contra entry, small c. The amount is 1,000. Good. After 27th, we move to 28th. Paid rent by cash. We paid rent by cash and the amount was 3,000. So we have rent accounts and cash accounts. So which account should be credited and which account should be debited? We paid rent by cash. Our cash is moving out, an outflow of cash. So we credit cash account. So we come to cash account. That was on the 28th of January. We paid for rent. And the amount was 3,000. Good. The amount was 3,000. So we move to the rent account and debit it. This is rent account. On the 28th, we paid through cash. The amount was 3,000. From the rule of nominal account, we debit all expenses. 30th, took cash of 200 cedis for personal use. The owner of the business took cash of an amount of 2,000 Ghana cedis for personal use. Is that okay? So the business took cash. Anytime the owner of the business took cash for personal use, that is drawings. The business will consider that as drawings. Is that okay? So part of the cash that was on the 30th has been taken by the owner for personal use. So we consider that as drawings. Take note that there is a difference between a cash taken for personal use and a cash taken for business use. Good. And the amount was 2,000. Good. So we move to the corresponding account called drawings account. Drawings account is here. That was on the 30th of January. So from cash, the amount was 2,000. The last and final transaction was on the 31st January. Paid salary by cash, 6,000. We paid salaries. So when we pay salary, cash is going out. So we said salaries, and the amount was 6,000. So every credit entry must has a corresponding debit. So corresponding debit over here, that was on the 31st of January. So we paid through cash. The amount was 6,000. So this is the entry in the various ledger accounts. So after you are able to make the entries correctly, the next thing to do is to balance off this account. So in balancing off an account, it is very simple. We've learned this in the part 2. It is about adding both debit and credits. So let's add the debit and credits. So to add, obviously the debit side is bigger than that of the credits. So the total is 221,000. The same should be for credits. Good. So this is bigger than this. So the total of this, which is smaller, should be subtracted from the total. So when we subtract, we have a difference of 109,000. We call this a balance, that is at the close of the month, 31st January. We call it a balance carried down, balance CD. So a balance carried down at the credit side will be a balance brought down at the debit of the same 109,000. This is how we balance off an account. So we do same for purchases. The total here is 85,000. Credit is supposed to be 85,000. So there will be a balance carried down of the same 85,000. So there will be a balance brought down of 85,000. So let's balance off the creditor, which is J. Thomas account as well. So the credit is larger and the amount is 50,000. So debit must also be 50,000. The difference between these two, 36,000 and 50,000, is 14,000 as the difference. We call this the balance carried down. So we call this the carry down, balance carried down. So there will be a balance brought down of the same 14,000. Is this clear? Good. So we can use the same way to balance off the rest of the account. In balancing off an account, okay, if only one transaction has been entered in the account, it is very simple to get your balance. It means that that side will be the greater side. For instance, capital account will be, the credit entry was 160,000. It means the 160,000 is the larger. So it means there will be a balance carried down of 160, a balance brought down of 60,000. So we will not even balance it. You can balance it, but we can leave it this way. But let's balance the capital account. There will be a balance carried down of 160,000. Then there will be a balance brought down of the same 160,000. So it means that if we have only one entry in the account, let's say at the debit side, it means the balance brought down will be at the debit side of 2,000, as we have it over here. So we don't even have to waste our time to do the balancing for the single entry. So we have a double entry over here. We can balance it. We have 62,000 as the total. We have here 62,000. So the CD or the carry down will be 62,000. So a credit balance, a credit balance of 62,000. Good. We have another over here. So debit is the bigger of 2,000. So 2,000. The difference will be 1,800. This will be the carry down at the end of the period. That is 31st January. So we have the brought down as 1,800. Is this clear? Good. We have another double entry over here in the bank account. The bigger side is debit of 3,000. You should have 3,000 at the credit as well. So the difference will be the carry down as at 31st of January. So that will be 2,000. So you have a debit balance of 2,000. Very good. So the rest of the accounts here are only single entry. So we can pick that direct to prepare our trial balance. So after you are able to balance off the account, the next thing to do is to prepare what we call a trial balance. So we are done with the very first part. The very first part said that open ledger account to record the transaction. So we are done with that. So the next thing to do is the B part. That is extract a trial balance as at 31st January 2020. And I told you that in preparing the trial balance, we only have to pick the debit and the credit balances and send it to the trial balance to help check how accuracy our entry have been in the recording of the ledger account. So because of the space, I'll clean this very portion and use this very portion for the trial balance. But take note that A cash account has a debit balance of 109,000, purchases a debit balance of 85,000. J. Thomas has a creditor 14,000 credit balance. So I'll clean this very portion and begin the trial balance over here. So this is how the format of the trial balance looks like. So the trial balance is prepared as at the end of the period we are preparing the accounts. So this is the debit side of the trial balance. This is the credit side. So we have the details over here. So if the account has a debit balance, we record at the debit side. If the account has credit, at the credit side. Remember that I've claimed three different accounts over here. I claimed cash account, so cash, and it has a debit balance of 109,000 if you could remember. We also claimed purchases, and it also has a debit balance of 85,000. Afterwards, we claimed J. Thomas, and J. Thomas is a creditor. The name even tells us all. It has a credit balance of 14,000. Good. After that, we can proceed to look at the rest. A capital has a credit balance. So we have capital, a credit of 160. We have furniture, will be a debit balance. We have furniture of 240, 24,000. We have sales credit balance of 62,000. We have bank debit balance of 2,000. Debit balance of 2,000. From here, we have advertising debit balance. A debit balance of 2,000. We have return invoice debit balance of 200. We have return outwards. And it was a credit balance of 1,000. I have stationery. A stationery of a debit balance of 2,000. We have Brenda. Brenda is a debtor, right? So it is a debit balance of 1,800. From there, we have rent account. Rent also have a debit of 3,000. From rent, we look at salaries. So we have salaries, and salaries is debit of 6,000. From that, we have drawings, a debit of 2,000. A debit of 2,000. So you could see that preparing the trial balance is very simple after you are able to make the various entries correctly. Is this clear? Good. So after preparing the trial balance, both the debit and the credit must be the same, must be equal. It means that the trial balance has balanced. This tells you that the arithmetic accuracy of the entry is actually correct. But take note that there are some errors that affect the agreement of this trial balance, and there are some errors that do not affect the agreement of the trial balance. Even though you may balance off the trial balance, but you may commit some errors that the trial balance will still balance. For instance, when you completely omit a transaction, the trial balance will balance but with a different figure. Is this clear? So the total of the debit is 237,000. When we add a credit to, we have the same 237,000. So basically, this is how we prepare a ledger account, and we also prepare a trial balance as well. So this brings us to the end of the double entry principles. I hope if you follow this particular question step by step, you should be able to solve all double entry principles. You just subscribe to the channel. We have so many things to learn together. In our next video, we may consider book of accounts and try to see how we record transactions in the various books of account as well. Until we meet in the next video, I think it is bye for now.